Good morning. It is 7:28, about an hour into the market on September 4th, Wednesday. And it's been kind of an exciting day already. Yesterday, we were talking about how we believed that today we would have more of a bounce and recovery day or a chop sideways day. And that's what we're getting so far. You can see in the S&P, didn't quite hit the MA50, but we're pretty close. But for the most part, we've traded up today. You can see we backed off of that EMA 20. What happened was we got that JOLTS report come out 7 o'clock or 10 o'clock Eastern, and it did not come in very good. The job openings were expected to be at 8.1 million, and we only got 7.6, which was actually below the entire consensus range and quite a bit lower than what we had previously. So the market did not react well to that at all. You can see at 7 o'clock, we had a huge red bar. So we were very much a slow and steady bullish movement until we hit that bar. And then we recovered and now we're chopping sideways. So did it really not have an effect, or did we take the wind out of the sails of the bulls? Maybe we would have kept on going up. But for the most part, it seemed like it was very temporary. And now we're just chopping sideways. And based on gamma exposures, I drew the lines on the chart of the highest concentrations of gamma exposure currently. And you can see that there's a lot more concentrations to the downside, but there is some to the upside. So basically, when you see this, you can see that's pretty range bound. And we're just going to expect more of a choppy day today. We could lean slightly biased to the upside or slightly biased to downside. However, this sea green, I guess, cyan type of color is the MA50. And if we manage to close below that MA50, then it is going to be more of a bearish sentiment in the market. That MA50 is going to be important psychologically and to institutions. So if we do manage to close below that, then we can expect a lot more bearishness to come into the market. So far, though, we are just looking at a chop sideways today. And the gamma, that's what we suspected would happen. A little bit of recovery, chop sideways. And that is certainly playing out with, at least that's what the gamma exposures are telling us. And so far this morning, in the first hour of trading, we have mostly gone sideways with a slight upward bias. So let's take a look at what's going on in terms of the sectors. Here we go. Okay. So you can see that, what is this? Energies are not doing well at all. SMH is recovering. What is this this red line? Biotech is doing okay. XLK is recovering, and XLY. So risk back on into the market, but actually it's not back on because we're really just chopping sideways. What we're doing is just undoing some of that rotation that we saw yesterday. I guess it wasn't rotation, the sell-off that we saw yesterday. So we're recovering a little bit from that, and there's no really strong sector. SMH, you can say, hey, that's the strongest, but it's really not that strong. If we look at SMH, that's just a recovery into that VWAP. So we opened below the annual VWAP, recovered into the VWAP. That's resistance right there. So we'll see. We'll see if this can come all the way up into the MA150, then we'll be a lot more comfortable, or even the EMA8. But if it stays below this annual VWAP, the chances are that we are going to trend down a little bit. The MA200 is pretty close by. So it's not a huge amount for it to drop before it gets some support. And because of that, we might just for the rest of the week chop sideways until we get the next catalyst, which is the employment situation. So JOLTS, we weren't expecting it to have a big effect. It had a effect basically for that one bar, just this one bar, and then we recovered right back up and then chop sideways. So the next thing is the Broadcom earnings announcements, which will affect us on Friday. And then on Thursday, we have jobless claims, but we have the employment situation on Friday. So no one's really going to care about that. It's really just going to be, all the focus is going to be on the Broadcom announcement and the employment situation. Broadcom will speak directly towards SMH. Broadcom is it's not NVIDIA, but it is a pretty important stock in the AI field and the semiconductor field. So what they have to say, especially their forward-looking statements, is going to be very important. And look what happened with NVIDIA. NVIDIA earnings, they reported really good earnings. A surprise of 5.18%, a surprise on revenue of 4.53%, and we just sold off. The earnings did not react positively to that. The market didn't react positively to that. So Broadcom could announce really good earnings, and the market is probably going to do the same thing that it did with NVIDIA. It's just going to be another excuse for it to sell it down. And we might take NVIDIA down to the annual VWAP. We might take Broadcom down to the annual VWAP, maybe even more, maybe all the way to the MA200s. And if that happens, then we're probably going to be below the MA200 by that time in the SMH. So it's not looking very bright for SMH. I did close the tail risk trade today because that was quite a bit of profit. That was a huge bar, and you can see that if I didn't, we would have lost some of the profit. We would have given some of it back. So there's always time that we have tomorrow's session still to put on a new tail risk trade or a new hedge if we think that's the best opportunity inside the markets, which it probably will be, but we'll see. Right now, our VIX is pretty elevated. We are currently at 20.32. We went as high as 23.31. This is a market that is in fear. As long as we stay above 20, that's at 19, let's put at 20. As long as we stay above that 20 line, then there's going to be fear in the markets, and we can expect continual movement to the downside. So we're kind of at the border right now. We're chopping sideways in the market. We're flirting with that 20 line. So we'll see by the end of the day if we're below 20 or above 20. And that'll give us a little bit of a clue and guidance as well. We haven't looked at the CPC in quite a while. Let's take a look at that. There we go. Okay, so you can see on this broad view, S&P 500, we're just above that MA50. That's a little bit of a danger zone. We do have a healthy amount of stocks above their 50-day moving average, though, at 71%. And then we also have, where can I see that? 73.5 above their, that should be the 200-day moving average. So from a momentum perspective, it still looks healthy. But if we break down below and there's no support over here, then that's a movement downwards, a movement upwards, a lower highs, and then we will move down. If this becomes a trend, then we'll see a lower low as well. If it doesn't develop into a trend, then we'll just have choppiness at this pretty wide range going into the US elections. Either way, if we move down, then we'll definitely see these two move downwards also. We've got a CPC at 76 currently. That's not at an extreme level. We don't have to bounce from here. 70 is normally our extreme level, although in the past year, we haven't really seen that number get breached all that much. So we're thinking about 80 was the range that we were looking at a little bit earlier this year, just because it never went down to 70 all that much. But for now, because of the elevated VIX, I want to give things a wider range. So we'll just move it back to 70. We'll just keep that 70 as our index point. So we're not quite at an extreme level. It did, for sure, some fear did come into that market yesterday. And but for now, we're not going to, the CPC is not that helpful to us. So this broader picture, though, is helpful to us, seeing that the number of stocks above the moving averages is still quite high. It's not, we shouldn't be in panic mode, but if we break below the MA50, but at the very least, it is a little bit more bearishness in the market. So the basic conclusion is right now we're chopping sideways. We should, for the most part, be neutral in our portfolios, maybe with a slight bearish bias just because there is greater risk to the downside than the upside, like I've been saying for a couple of weeks now, maybe 2 to 3 weeks. And if we break below that MA50, then we'll be even more bearish, but we won't be full on bear inside of our portfolios. We still have to have some sort of balance because we would not call this a bearish trend until we make a lower low and we break below that MA200. And if that happens, then we will be in a bear market and we'll start pointing everything to the downside. But for now, we still want that more balanced approach. Okay, so for today, I'm not expecting a huge trend. There is generally only a couple of large run days in a week, usually maybe just one on average. But if we're talking in terms of mode, like most often, then two would be the most that we usually see. That's not true necessarily true in a momentum market. So you can see that we had 1, 2, 3, 4, 5 days in a row right here where they really ran, but only the last one was a really large run day. These are probably just more normal days. So let's see, the ATR here was 3.83 and the movement was, I'm sorry, 3.83 and the movement was 3.47. So you can see that was inside the ATR. Here, movement was 1.97, ATR is 3.8. Here, the movement is 1.79, the ATR is 3.69. Okay, you can see that all of these first 4 bars were inside the ATR. It's only this day right here where we moved 6.4 and the ATR is at 3.98. So that's what I mean. There's only really potential for 1, maybe 2 days for us to move more than the ATR in any given week. And yesterday we moved 11.6 and the ATR was 7.7. So we definitely surpassed that. So the rest of the days, most likely we're going to stay within our ATR range. And it doesn't mean we can't trend, but we just aren't going to expect a huge movement inside of a given day. And I don't think we will trend until we get the employment situation on Friday. So most likely we might drift upwards. It looks like we still have that positive bias in the market. The bulls are still in control. Once we get to the 555 or 556 level, then that's probably about it. So if you're going to day trade, just keep the 555 level and 556 level in mind, regardless of if you're day trading the SPY or another stock, as long as it's highly correlated to the SPY or inversely correlated to the SPY, you still want to watch these levels. And if we approach the 555, that's time to take profits, whether you're trading down or trading up, because that is a very, very likely inflection point, or at the very least, a place where it'll pause and stop and consolidate for a long time. So just keep that level in mind. Just keep a SPY chart open if you're going to day trade. It doesn't matter what symbol that you're trading. Okay, so that's it for this morning. We got a pretty clear picture of what most likely our markets are going to do. I'll see you guys in the post-market review.